Hello, everyone. My name is Riley Pollard, and I'm a senior in the AIM program covering international consumer discretionary. Today, I will be pitching Sony Corporation's ADR, ticker SNE, with my junior AIM mentee, Justin. Sony is a stock that has been on my radar for quite a while. Its impending drivers, combined with its attractive multiples, especially its PE ratio, are what pushed me to finally advocate for adding this stock to our portfolio. Sony Corporation designs, develops, produces, and sells electronic equipment, software, and devices, as well as motion pictures and music worldwide. Their diverse portfolio consists of 6 reportable segments: game and network services, music, pictures, electronics products and solutions, imaging and sensing solutions, and financial services. They derive the majority of their revenue from Japan, the US, China, and Germany. Sony was founded in 1946 and began trading on the New York Stock Exchange in 1970. They are headquartered in Tokyo, Japan. Now, on to my recommendation. Sony Corporation is a multinational conglomerate that produces electronic devices, music, and movies that we all know and love. Sony Electronics provides us with flat-screen televisions, Xperia smartphones, and Vaio laptops and computers. Sony Pictures Entertainment's portfolio includes films like Spider-Man, Men in Black, and Charlie's Angels. Sony/ATV Music Publishing represents icons like the Beatles and the Rolling Stones, as well as contemporary superstars like Beyoncé and Pharrell Williams. Finally, Sony Interactive Entertainment is responsible for their well-known PlayStation. Sony's diverse portfolio helped them generate over $75 billion in sales in fiscal year 19, while growing their operating and net income at 4-year CAGRs of 30.2% and 40.8% respectively. First quarter fiscal year 20 sales increased 2% quarter on quarter, and net income attributable to Sony stockholders increased by $775 million US dollars. The COVID-19 pandemic has pushed Sony to transform the structure of their business into a more resilient one. While Sony is already the poster child of diversification, they plan to invest in and explore mid to long-term growth initiatives and develop new businesses, including artificial intelligence and robotics. For these reasons, it is recommended that Sony Corporation be added to the AIM International Equity Fund with a price target of $104.69, representing a potential upside of 35.14%. Now, I will move on to my drivers. My first driver is console craze. The PlayStation 5 will finally launch on November 12, 2020, making it 7 years since the PS4 was released. The first 2 rounds of pre-orders for the console sold out within hours. As of late September, $29.4 billion worth of video games have been sold in the US, a 23% increase from the same period last year. In Sony's Gaming and Network Services segment, Quarter 1 sales for fiscal year 20 increased 32%. Further, this segment's total sales in fiscal year 20 are expected to increase 26% over fiscal year 19. Sony is also growing their recurring revenue streams with PlayStation Plus, a subscription with 45 million users that increases engagement and allows them access to the library of PS4 games. Sony's consoles and their corresponding games consistently account for about 1/4 of the company's top line. Taking into account the impending PS5 launch and Sony's efforts to expand user engagement, this number will inevitably grow. My second driver is smartphone smart returns. The LiDAR sensor in the newly released iPhone 12 is created by Sony and greatly enhances augmented reality and 3D scanning. Sony had previously supplied sensors for the iPhone 11, which was the first iPhone released with a triple camera system. The proportion of smartphones with multiple cameras reached 81% in June, including 58% with 3 or more cameras and 31% with 4 or more. Sony commands nearly half of the global image sensor market, which is expected to grow from $17.2 billion in sales in 2019 to $27 billion in 2023. Sony's Imaging and Sensing Solutions segment comprised 13% of fiscal year 19 revenues. The technological competitiveness of Sony's image sensors give them an edge in the evolving smartphone market. My third driver is Sony Financial's private party. In early September, Sony Financial Holdings became a wholly owned subsidiary of Sony in a deal worth $3.7 billion. In quarter 1 of fiscal year 20, Sony's financial services revenue increased 33% year over year to $4.3 billion, with operating income increasing $105 million. Financial services revenue in fiscal year 20 is expected to increase 7% from fiscal year 19 to $13.4 billion. By capturing minority interest and realizing tax benefits, Sony expects to increase their consolidated net income by approximately $382 million to $478 million per year going forward.
For our evaluation, in order to reach the firm's intrinsic price, moving on to our risks. First, Sony's pictures in Kenichiro Yoshida has been the CEO and president of Sony.
Thank you for listening. Justin and I think Sony is a great company with strong impending revenue drivers and exciting growth opportunities. We look forward to answering your questions on the D2L threads as well as live this Friday at 11 a.m. on Microsoft Teams. Thank you.